Borrowing under a trust structure was the biggest talk in town the last 2 years, but guess what just happened? One of your major banks in Australia just dumped it. I'm your host Tony Shah, and thanks for joining me on another episode of the Mortgage Chat. If you don't already know, Macquarie Bank has recently just dumped all trust and company structures, and it's caused up a stir. So let's talk about it. Number one, let's talk about what is actually a trust structure if you don't already know. I've done a video up here on how a trust structure works. Okay, so I don't want to explain the whole thing. Watch that video. It's a way how people can keep on maintaining borrowing power with different trust structures, right? But there's an art to it. There's a way to it. It doesn't work for everybody, okay? So watch this video explains how a trust structure actually works and how investors have the ability to keep on investing under different trust structures to keep on buying different properties and build a property empire. But it's not the correct structure for everybody, okay? So let's break that down a little bit more. But first of all, just watch this video up here because that explains everything. So Macquarie Bank stopping these trust structures or company structures has caused up quite a stir. But guess what, guys? You've actually had the last 2-3 years or even longer to buy properties under this structure. So you only have yourself to blame, right? So you had all this time to keep buying properties under this structure, but guess what? You're only chucking a stink right now when they've stopped it, all right? But the thing is to even know how it works and if it's the right structure for you. So number one, with a trust structure, there's no negative gearing benefits. Okay, so is it even the right structure for you, right? Because under a trust structure, you don't get any negative gearing benefits. All the negative gearing benefits stays within the trust. So if one of your properties are negative geared by, call it $1,000 a month, okay, how many of these negative gearing properties can you sustain, even if you can keep on buying under different trust structures? So if your goal is to buy 10 properties under 10 different trust structures, that's $10,000 outlay every month. Can you actually sustain it? Because if you can't sustain it, well, a trust structure may not be the right option for you, okay? So there's no reason to kick a stick about it saying, oh no, guess what? There's no more trust structures. I can't build a property empire. The thing is, a trust structure wasn't even the correct structure for you to begin with. Because the thing is, you can't keep on sustaining and maintaining that negative cash outlay from the trust structure and the trust line, because all the negative gearing benefits stays within the trust and it doesn't actually get passed on to your individual name, which is what a lot of people don't understand. And another thing is you have to keep doing financials for every one of those trusts every year, which could cost anywhere between $1,500 to $2,000. Okay, we do have a lot of clients that buy a lot of property under a trust, but we slowly diverted them from buying under a trust the last 6 to 12 months because it was just not sustainable for them to keep on buying properties under different trusts for the reasons what I just told you. Okay, the thing is, we used to do a lot of trust structures, but the problem is property prices went up too high, too fast. The rental yield was just getting lower and lower and lower. So the cash outlay was actually quite high. Therefore, we actually slowed down on the trust structures the last 6 to 12 months. Instead, we started buying more properties under the individual name with second, third, and fourth tier lenders. But to be real honest with you, a lot of our investors actually are capped out with the second tier lender. Maybe, just maybe, they might buy one more with a third tier lender, but after that, they're actually quite capped. Even with the negative gearing benefits, they're going to get back, okay? Because the cash outlay was just too high. So what I'm trying to say is, yes, the great thing is the trust structure allows you to keep on borrowing, but the cash outlay does not allow you to keep buying properties under a different trust structure. So instead of thinking about going on down the trust structure, work out your cash flow, see what you can borrow under a trust structure until you can't sustain it anymore. And I can guarantee you, it'll be very similar if you were to buy it under your individual name. Okay, we still have clients that maybe buy 1 or 2 properties under trust structure and that's it. They stop, all right? And they regather, they review it a little bit down the track, okay? But for now, a lot of our clients are actually sticking with individual lending because the trust structure just doesn't cut it out for them, okay? So let's talk about why the Macquarie Bank stopped trust lending. So I have to say it, Macquarie Bank had one of the loosest trust lending policies out there, okay? So a lot of the other lenders out there call it St. George, call it CBA, call it even, I think NAB as well, okay, where, hey, do you know what? If you can obtain an accountant's letter to say this trust here is self-sustainable, then guess what? If you buy another property under another trust, call it trust number 2, they will exclude the debts from trust number 1 because it's self-sufficient, neutrally geared. Now, a lot of accountants didn't write that letter because they knew trust number 1 wasn't self-sufficient or neutrally geared. Therefore, Macquarie Bank brought out this new policy about 6 months ago where, do you know what? If you can self-declare that this trust is self-sufficient, we don't need an accountant's letter. So everybody started jumping on the boat to use that policy, okay? And guess what? Your brokers, your buyer's agents, your accountants started flogging all these services and tell them to start buying under trust when, guess what? This trust structure was probably not the correct trust structure for them because all these clients were not educated enough with buying a property under a trust structure. So a lot of people actually started going to Macquarie Bank and start applying for trust loans with different trust entities and self-declaring is self-sufficient. Look, a small portion, I would say yes, is self-sufficient, but a lot of it were not self-sufficient. In fact, they were quite negative geared. Okay, it was just a policy that Macquarie Bank brought out. It was the best policy at the time to keep on borrowing, but for a risk perspective, it wasn't the greatest. Okay, and they even took it one step further where, hey, do you know what? If you had an investment loan under your individual name and the title was under individual name, they would allow you to get a trust loan to pay out this individual loan, but the trust loan is still secured against an individual property. So guess what happens? Now I can exclude this debt because it's under a new trust entity. So therefore I can borrow under another different entity and exclude the debt in this entity, right? And the reason why this policy was so great and so powerful was because the trust just took over the loan. They didn't actually buy the property off the individual. Therefore, there was no capital gains and there was no stamp duty involved. Okay. A few weeks down the track, we had an email correspondence from Macquarie Bank to say, hey, do you know what? Because we had so much applications with trust lending and it was getting out of hand, we've actually limited trust lending and company lending to one client only. Okay, so if I had trust lending with other lenders, not a problem. I can still have one trust or company loan structure with Macquarie Bank. But if I wanted to get a second one, it was a big no-no. Okay, so that was just overnight out of nowhere. And guess what? The next few days they announced they were cutting out trust and company lending altogether. And professionals like us sort of have a bit of fault at this as well, okay? Because mortgage brokers was flogging this structure out, right? Without telling them the risk involved, without telling them the cash flow involved, okay? And just keep on selling this product or this structure, maybe because they can get a better commission, more commission at the back end, okay? Buyer's agent flogging it harder than mortgage brokers, okay? Don't know why. They have no fucking idea how this structure works on the back end. I don't even know why they were even offering this structure, purely because they can sell more properties, obviously. And accountants too. Accountants will know the client's cash flow more than any of us, okay? So for accountants to actually go, yep, trust structure is actually okay, go for it. It's actually quite risky, right? Because we all know if you're borrowing 80% of the purchase price, okay, and your rental yield is only 5%, and that's quite high, by the way, you're not going to be positive geared or even neutrally geared when your cost of funds are around 5.75 to 6%. So accountants yourself also have fault at this. So I think all three professionals, okay, accountants, buyer's agents, and mortgage brokers, do have some responsibility in regards to this trust structure, okay, because we are somewhat preying on uneducated investors out there that don't know the logistics of how it works, okay? And I think the last straw for Macquarie Bank was when Pika sent them a letter showing them and telling them how risky it was to keep on lending this unlimited borrowing power and the amount of advertisement from brokers, accountants, buyer's agent trying to flog out this structure and not explaining the risk involved, especially to uneducated investors. And the letter actually specifically notes that we are preying on uneducated investors. And this letter was actually posted up by my mate David Hamilton on his Instagram, okay, explaining in detail how risky this structure was. And I think that was the last straw why Macquarie Bank has pulled out of this structure straight away, overnight. So there you have it, everyone. That was the fall of the trust structuring lending policy for Macquarie Bank, where it was all the way up here. Now it's gone all the way down here to non-existent. And remember what I just told you, a trust structure may not even be the right trust structure for you. So look at this video up here that I've done on trust structures, and look at this video up here where I explained how you can keep borrowing if you can, and if you can sustain it with second, third, and fourth tier lenders. Because sometimes borrowing under an individual name with these lenders could still be more beneficial than a trust structure, if you can still do it. Okay, even though Macquarie Bank has pulled away from this lending, you still got lenders like St. George, ANZ, CBA, NAB, Firstmac, Resimac still do this type of lending. But is it the right structure for you? You should be talking to your broker in more detail and explaining how it can benefit you, or the opposite, what's the disadvantage of it. I'm your host, Tony Shah. Thanks for joining me on another episode of the Mortgage Chat.